Welcome to Accelerate Your Business Growth with your host, Diane Helbig. Diane is a leading small business development and leadership coach, author, and speaker who is passionate about sharing valuable ideas, tips, and techniques with business professionals worldwide. Diane brings you the world's experts and gurus in all things business, whether it's sales, structure, social media, planning, or plateauing. Guests bring their expertise and energy to each episode. When growing your business is your focus, Accelerate Your Business Growth is the show to listen to. Got a topic or guest suggestion? Let Diane know. The goal is to make sure you have the information you need to move your business forward. Thanks for joining us. Settle in and enjoy.
Well, hello, everybody. We've got a great show for you today. The show is sponsored by Audible.com. Audible.com is a leading provider of spoken audio entertainment and information. Listen to audiobooks whenever and wherever you want. You can get a free book when you sign up for a 30-day free trial at audibletrial.com/businessgrowth. This show is on the list of the 100 podcasts to listen to if you want to be smarter, wiser, and better on Inc.com. And it's also on the list of the best small business podcasts on Fit Small Business. This is absolutely due to the great guests I have the honor of speaking with, and today is no different. Our guest today is Craig Cody. Craig is a certified tax coach, certified public accountant, business owner, and a former New York City police officer with 17 years' experience on the force. As a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country who undergo extensive training and continued education on various tax planning techniques and strategies to become, as well as remain, certified. With this organization, Craig has co-authored an Amazon bestseller book, Secrets of a Tax-Free Life. Thanks for being on the show, Craig.
Diane, thank you very much for having me.
I am thrilled to have you. It's been quite a while since I've had someone talk about proactive tax planning, and I think it's so important for business owners, and it's one of those things that we avoid and don't pay attention to until we're sort of forced to. So can you explain to my listeners what proactive tax planning actually is and how it can help minimize taxes?
Okay. Well, most accountants, clients working with their accountants, they're actually being reactive. They're putting the right numbers in the right boxes. They're being compliant. Okay, but nobody's looking to see what can I do a little bit differently that'll help me keep more of what I make. Okay, and by using various strategies out there that are legal, okay, sometimes it just takes a little bit of work, and you could save substantial money.
Wow. So I love this whole idea of actually thinking about it, right, instead of reacting, as you said, but really looking at it and thinking, okay, what can the business do to hang on to their money? I loved it when you said that, to really be able to hang on, because it's a different way of looking at it than minimizing taxes. If you think it's their money, they earned it, they should be able to keep as much of it as possible. So what do you think the biggest mistakes small business owners make regarding their taxes?
It comes down to failing to plan, okay? Looking in the rearview mirror when they should be looking ahead of them. In day-to-day business, when we do things, we look forward, right? How is this going to impact my business going forward? So we do things when we plan our business, But when it comes to taxes, everybody looks at it as this is an expense item. I don't want to really deal with it, okay? But if we're proactive and we think and we try and use strategies that are legally available to us, we wind up keeping more of what we make.
Oh, that's so great. So it's really a matter of, and boy, I can so relate to thinking of it as an expense. You have to pay your accountant. They have to do these things. It keeps you legit and legal and following all the rules. But there's really so much more you can do. So how does a business owner actually use their accountant to their advantage?
It comes down to communicating with them. So, if they wait to see their accountant in February, March, or April, there's not a whole lot that their accountant can do but record the history they've made. If they're not working with a proactive accountant, okay, they need to go to their accountant or seek another accountant that's going to be proactive and go to their accountant and say, okay, show me some ways I can legally save some tax. What can I be doing a little bit differently? Okay, what am I missing? Help me here. Okay? And that's communication is key. With our clients, there's constant communication because things change, businesses change, and people work really, really hard for their money.
Yeah. So what does that look like when you say constant communication? How often are your clients communicating with you, or how often would you say a business owner should be communicating with their accountant?
At least, you should at least have a phone call monthly, maybe if you're, depending on the level where you're at, maybe quarterly at absolutely worst case scenario. But, with our clients, we work with them on a regular basis, so we're in touch with them, throughout the month. Okay, and things change, things come up. Maybe they're thinking of something, and sometimes if you have that communication, you can say, well, okay, this is what you want to do. Maybe if we do it a little bit better, this is the benefit we can, get from that.
Yeah, I really like that a lot because, the business owner's so heads down in their business and they're just working. They're not thinking about various implications of the decisions they're making and the things they're doing. And you're right, things do change. And so I would think that the accountant's the one who's going to, hear what's going on or what's being planned and be able to look at it in terms of, okay, what's the best way to maximize that? Or even saying to them, here are the implications of doing that. Maybe it's not something they should be doing.
Right. And most accountants are going to tell you the implications of something you bring up to them, okay? But they're not going to be, proactive with their clients on typically what we say. They're not proactive. They're not coming to them with ways to save money, okay?
Okay.
We kind of ask people, when was the last time your accountant came to you with a way to save money? And they looked at us with that kind of glazed over look. And it's, it could be little things from starting your business to entity formation, okay? That can have a big impact on, the amount of taxes you pay.
Yeah.
It really comes down to just taking the time and saying and communicating and making sure you're working with the right person.
Yeah, right. Exactly. So, and would you say that all business owners need to have a tax plan?
Oh, yes. Yes. I mean, all people need to go to the doctor for a physical, right?
Right.
That's
a great
we need to do that. There's no reason, why not keep more of what you make if you can? If you can do it legally, why not?
Well,
Warren Buffett's do it.
Right, and all the time. And I thought, I think one of the things I want to make sure my listeners hear is even from the outset, if you're thinking about starting a business, it's a great time to be talking to a proactive accountant because how you decide to structure your business can have tax implications. And, all of those decisions that you make that you think are just for running the business well can really have an impact on your taxes, how much money stays in the business, how much money's going out, how complicated things get. Yeah.
And I say, when you're forming it, have the attorney, have your CPA, have them communicate, okay? Because the attorney's looking at it typically from a liability point of view. And the accountant, if he's proactive, he's going to look at it from a tax point of view. And a lot of times there is a happy medium for the two of them.
Yeah, so it's sort of like treating them as advisors. So, it's having that team that comes together with you and says, overall, this is the best course of action for you to be taking right now, and then keeping that communication going, as you said, so that as they grow, as things change, whatever's going on, they're making sure that they're in the right place.
Yes, that's definitely the way it should be.
So can you give us an example of, so you said how they're set up, from a structural standpoint, but do you have other examples of things that business owners don't think about that are actually, either things they should be thinking about or ways that they should be working with their accountant to make sure that their tax liability is minimized?
Yes, like certain strategies they should be using.
Yeah.
And let's just say the correct entity, and then we get into the correct entity, and we're looking at a Section 105 plan, which is a medical expense reimbursement plan. Okay. And that's something that allows you to write off all your out-of-pocket medical costs. Okay, so some people have big deductibles that they can't write off, or they can't write off their glasses or their braces. Okay, you have a couple of kids getting braces. That's a lot of money. Now I can write that off with a Section 105 plan. I just saved a bunch of money. You have your home office. You have an accountability plan. Okay, that allows you to say, okay, I'm going to get a check every month for X amount of reimbursed expenses from the business, and at the end of the year, I need to give them all those receipts, okay? That turns into a lot of things that would have been missed opportunities to saving you tax dollars. So those are just a couple of small things. I mean, sometimes having the right entity classification can save you a huge sum of taxes.
So I want to ask you a question about that medical expense reimbursement thing. If a small business owner gets their health insurance from their spouse, from their spouse's job, can they still set that thing up?
Yes, they can. And actually, there's just recently, as about a week ago, they just changed the rule again on that. So basically, if they had a medical expense reimbursement plan, or even if they didn't have a medical expense reimbursement plan, they can reimburse and take the deduction. All right. Then, as part of the whole, Healthcare Act, it was being, I don't want to use the word phased out, but there was a certain date you could not, it became not legal anymore. And it's only in the last week that I saw it come down. It was changed and allows you to do that. So, so if your spouse is paying for it, you can reimburse them for it as, I'm putting it real simply, okay, as a deductible health insurance.
Really?
Yes,
See?
Or use a Section 105. So,
that's fascinating.
Yeah, and these things change, and it's funny with a Section 105 plan. There's a form that has to be filed in July every year, and it's like cost you $1 per participant. So figure out if you have kids, one has braces, maybe glasses and stuff like that. You have $10,000 worth of expenses. That could save you a lot of money. Just that one little thing.
No kidding. Boy, no kidding. See, thank you so much for doing that. That's a great example of something that, I would say the vast majority of people would not think of, they would not know about, and if their accountant is just doing the typical usual, right, doing the reactive stuff, making sure everything's in its boxes, they totally miss that. So,
right.
That's really, thanks. That's a great example.
And it's just one example. There's so many things out there that, I'm part of a group. We do a lot of training, okay? And, we're constantly learning things that we're allowed to do and how the code changes what we're allowed to do now, all right? And some of these more obscure rules that are legitimate rules, okay? And, yes, you have to cross the T's and dot the I's, okay? But they're worth the minimal amount of time, and it's really just because you're being proactive, okay? You're able to do it.
Yeah. That's really, and something that you just said that I thought was really key is things are always changing. So, you need people like you small business owners need people like you who are keeping up with all of those changes, because there's no way we could, and still run our business and do our thing effectively.
Like I tell my clients, you make your money doing what you do, okay?
Yeah.
It's not something that you should be doing because it's really costing you money. That time can be better spent gaining new clients or whatever it is that you do.
Yep. Boy, that's awesome. I have to take a quick sponsor break. Accelerate Your Business Growth podcast is happy to be sponsored by Audible.com. Audible.com is a leading provider of spoken digital audio, entertainment, and information. They have over 150,000 titles to choose from, and you can listen to them on any device, including whatever you're hearing us on right now. And if you sign up at our link, which is audibletrial.com/businessgrowth, you get one free audiobook and a 1-month trial of the service. Some examples of books you can listen to on audible.com are The Secret of Peak Productivity by Tamara Miles and The Go-Giver by Bob Berg. So visit audibletrial.com/businessgrowth, explore the books that are of interest to you, and receive one free audiobook when you sign up for the trial. Our guest today is Craig Cody, and we're talking about proactive tax planning for your small business. Can you give us, Craig, like an idea of how much a typical small business owner could save by having a plan and a strategy?
I would say, we look for savings of $15,000 to $20,000, and there have been many more that have been much more than that. Okay.
Wow.
But that's kind of like what we like to see. It's an investment in time and money for everybody involved, and we want to see a very good return on their investment. So,
right.
$15,000 to $20,000. Obviously, if somebody's not paying any tax, today we're not going to save them that kind of money.
Yeah.
But if you have a business owner that's making money, all right, there's savings to be had. And I like to tell people. I'm sorry.
Go ahead.
I like to tell people, what could you do with all that money? And if you look at it over, even if it's only $15,000 over 10 years, that's $150,000.
Right. Exactly. Is there a certain entity selection that lends itself to, I guess I'll say, greater savings with a tax plan?
No, because every individual situation is a little bit different as far as what people have going on, and certain entities you can take advantage of certain things in. Okay, and there are times when we have clients where they have multiple entity setups. Okay, and it allows them to take advantage of different things within the code.
Oh.
And then we have clients with real estate, and they have all these passive losses that they're not able to take. And we figure out a way to set up something legitimately that's going to be generating passive income. And now they're offsetting that passive income with those passive losses that they have sitting there. And mind you, these are all legitimate things. This is not stuff that we have to run and hide if the IRS was to come looking. These are all legitimate.
Yeah, and that is a great point. This is it's all things that are allowed through the tax code. It's just, I would say, it sounds to me like the accountant really needs to know their client, and they really have to understand, know what's going on with them, what's gone on in the past, and then really be someone who, knowing all of those opportunities, can put a plan together that really makes the most sense and maximizes their savings.
Right. For the accountant or CPA, it has to be a way of life. It's a way of thinking. Okay?
Yeah.
You have to be looking at every situation the way we look at things. And it's just like having a conversation with somebody. This is what I do. These are the things that I spot right away, and I have a lot of practice at it.
Yeah.
And by communicating with the client, things are unveiled, and you're able to fix them or adjust them.
Why do you think this isn't a thing that all accountants, all business accountants do? Is it that they just don't know, or are they not trained that way? What do you think?
I think accountants by nature have a certain personality type.
Yeah.
Is part of it. They're not trained to look at it that way.
Yeah. That's a shame. You would think they would be, that, they all would be.
But it's not the way the industry is kind of set up. It's all about the billable hours, so I have to get this done in this amount of time, so I don't have the time to look at these things and think, where we're set up differently, so it's not about the billable hour. It's about, okay, what value can we bring the client?
So how is it that you came to deciding this was the way you wanted to proceed with your practice?
It was a second career for me, obviously, so I wanted to do things a little bit differently. In the beginning, I was doing estate planning, and then when the laws changed, basically you really needed an estate, closer to $15 million, before there was going to be a tax if you did a little bit of planning. Yeah. And after they changed the rules, and that's the way it was, we started looking at some of the clients we did estate plans for, and we saw the way it actually impacted their income tax. And it was like an aha moment. And then when I found the group that was really based around this, it was another aha moment, and it was able to help us systematize what we really wanted to do. So I came into it in a roundabout way.
Yeah, that's how it happens a lot of times. But it sounds like it really connected with how you see the world, how the things that you wanted to be able to do, the difference you wanted to be able to make.
Right, and there's nothing, the joke is, how do you go from being a police officer to doing this? And I always say, that adrenaline that you got chasing a perp down the street, when I tell somebody you save $20,000, $25,000, $50,000, okay, that's exciting.
Yeah,
that's exciting.
Right. Yeah, that's so great. So how does a small business owner find out if, I'm going to say if a tax plan can help them, but I think also if they're getting the best strategy, the best plan, the best solution from their accountant?
So a simple test is, asking yourself, when was the last time my CPA or accountant came to me with an idea to save me taxes? If the answer has been never or a very, very long time, okay, it's time to look someplace else. And when they look to us, what we do is we analyze their business and their personal tax returns, and we look for missed opportunities and mistakes. And we put together a very simple one sheet that basically says, okay, this is the missed opportunities that we see. These are the potential mistakes that we see. This is what it's costing you, what you're overpaying in taxes. If you want to stop overpaying that amount of tax, we can do a plan for you. And then we talk about the cost of a plan and the return on investment. And our plans are 100% refundable, and nobody has ever asked for their money back.
I'm sure they have not. That is just really, it's great. I really appreciate this information. I mean, I've learned so much, and just in the short time that we're talking, and I'm really thinking that this is the kind of thing that all small business owners need to take a look at. They need to just ask themselves the question, and then I love that question. When was the last time your accountant came to you with a cost-saving idea? I mean, geez, that's a direct indicator. It's quick, it's easy, relatively painless, and really, really important. One of the things that I tell my clients is periodically you have to evaluate if you're getting what you should be getting from your service providers and your vendors, because they either have a way of working that isn't progressive or proactive, or you've been working with them for so long that it's gotten normalized. It's just, this is just the way it is, and nobody's really thinking about ideas or getting creative, in their thinking or being curious with, is there another way? So.
And the other really important thing that people should remember is it doesn't mean you need to leave your current accountant. They can be your friend, your relative, your neighbor. And you could take a plan and go back to them, and whether you implement it with us or you implement it with them, now you have all the secrets, okay? You have that secret sauce. You can implement it and do it and still keep your relationship.
Yeah, that's great. That's great, because it's funny that you say that, because as I was, saying, you got to evaluate, I was thinking, right, and then there's the guy whose brother-in-law does, his taxes, and he's thinking, sure I could, but I'm sort of stuck in this situation. So that's great. You can be, but, you can stay where you are, with who you have after having the evaluation. My opinion is it shouldn't impact your relationship. You have to do what's best for your business. And if working with a particular service provider, accountant, or lawyer, or whatever, isn't, getting you what you need and isn't helping you really be successful, then it might really be time for a change, and that's okay. When it's not, business isn't personal. It's a business decision that you have to make. So I know sometimes that's hard, but
yes, it's sometimes it can be hard for a lot of different reasons, and we like to tell people, you can continue that relationship, and we've actually had people where, they've continued the relationship almost like a phantom tax return that never gets filed.
Really?
But it works for them. It works. It's kind of like it works for them.
Yeah, that's interesting.
So,
there's always a solution. Yes. There's always a
exactly.
way.
There's always a solution. You have to look at the cost benefit there, and sometimes that benefit, there's a benefit for whatever reason to maintaining that relationship and not wanting to disrupt it for whatever reason it may be.
Exactly. Boy, that's so
great.
And
it's easier to do when you just put another $20,000 in your pocket.
Yeah, exactly. That's right. It's painless, right?
Right.
That's so great. Oh, my gosh. Craig, I really appreciate this. Will you tell my listeners how they can find you, anything, how they get the book, anything you want them to know? Great.
Yes, the website, hopefully we'll have a link on with your show notes, but the website is craigcodyandcompany.com/A as in accelerate, Y as in your, B as in business, G as in growth. And there will be an opt-in box to request our newest book, which is called The 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And that's a free gift to any of your listeners if they want to opt into that. Oh, that's so nice.
That's great. Thank you.
So, and then, they can obviously contact us via phone, which is 516-869-4051, extension 1, which goes to my administrator, which makes sure that somebody picks the phone up. And, I am not sure when this will air, but it's late December right now, and there are still almost 3 weeks left of tax planning season.
So true. I know. Okay, that is so great. We will definitely make sure that the website link is on the show page so people can access that, not only by hearing it, but by looking at the page.
That's great.
Yep. Oh, this is so great. Well, I really appreciate it. I know that my listeners appreciate it. I'm hoping and thank you so much for offering the book. That's really awesome. I'm hoping they all go and get it. I'd also like to remind my listeners to visit our sponsor, audible.com. Get your free trial and a free audiobook by going to audibletrial.com/businessgrowth and signing up for that free trial. If you enjoyed this episode, please visit iTunes. You can subscribe to the Accelerate Your Business Growth podcast and give it a favorable rating if you are so inclined. That way, when you subscribe, you'll continue to receive updates when new episodes are posted. You can, listen on the go, always accessible to you wherever you are. That's our goal, to help you in your business. So once again, Craig, thanks for being with us. Thanks to my listeners, and I hope everyone has a prosperous couple of weeks until we are together again.
And Diane, thank you very much for having me.
Oh, it's my pleasure. I'm really glad you were with us. Okay, I'm going to clip this part out, but I just wanted to say thank you. I will edit this part out, and I will, get the show in the queue and let you know when it is. This was awesome.
Oh, great. Thank you very much for having me. It was exciting for me. I love talking about this stuff. It really is it's so exciting. It really is.
Yeah, it's really great.
I'm so lucky to be a guest on your podcast.
Pardon me?
I'm so lucky to be a guest on your podcast.
Oh, well, thanks. Well, I'm just thrilled to have you here. I like how enthusiastic you are about it. I think it's a really important topic. So we're going to work to make sure it gets out there to everybody so they can hear about it. Okay?
Great. That would be wonderful. Thank you.
Wonderful.
Thank you.
You bet. Have a great day.
Okay. You too. Bye-bye.
Thanks. Bye-bye.